In this week's video, we'll review the latest charts to help us answer the question, the big picture, is it reassuring or concerning for stocks? We'll start with volatility and the primary trend, and then in the back half of the video, we'll talk about small cap outperformance in 2012, what type of progress small caps have been making, and the impact on large caps. Quote from one of the market wizards, Ed Seykota, "Markets are fundamentally volatile. No way around it. Your problem is not the math. There is no math to get you out of having to experience uncertainty." The numbers on your screen that we covered in a February 2024 video told us we were in a secular trend. The numbers from Thursday's volatile session, July 25th, 2024, reaffirm the fact that we're in a secular trend. And volatility is a normal part of all trends. For example, 1950 to 1968 window, a secular period. 1982, bottom of your screen, to the year 2000, another long-term trend in the stock market. And after those trends were already established, there was a lot of upside walking forward from 1957, a lot of upside walking forward from 1989. But to capture that upside, you had to deal with normal volatility. The average drawdown in the two secular periods on the right side of your screen, over 10%, 12.28%, median around 10%. So we want to make sure that we don't let fear of 100% normal and to be expected volatility prevent us from reaching our long-term goals. And that's staying with the secular trend as long as the data allows. What do the numbers on the screen tell us? Here's your secular trend period here. This is the 1950s. This is into the end of the secular trend here in 1968. The numbers, or the data that we have in hand, tell us most likely we're in one of the strong periods during the secular trend, one of the blue boxes. And that tells us, for the most part, any short or intermediate term volatility will most likely be followed by higher highs. If these numbers begin to deteriorate in a meaningful way, that will tell us that it's possible that we're moving from one of the blue boxes over to one of the orange boxes. And that may happen very, very soon. It hasn't happened yet. Figures in the bottom of your screen are intraday on Friday, July 26th. We're going to talk a little bit about leadership. And before we do that, we want to make sure that we don't get confused between normal rotation and primary trends. Left side of your screen, this is the long-term primary trend. XLK relative to IWM. These are counter-trend rallies here within the context of a long-term uptrend. The ratio is well above an upward-sloping 200-week moving average. As you can see, the counter-trend moves can be substantial, and they can last several months, possibly even as long as a year. So they are relevant. But the fact that IWM has been outperforming XLK at this point doesn't mean the primary trend has shifted, and we do not want to lose sight of that. The same is true for SPY, the S&P 500, relative to IWM. The primary trend is relevant, and the counter trend move is relevant. Is it possible that the primary trend is flipping away from XLK and away from SPY in favor of IWM? Sure it is, but we don't have evidence yet to say that that's the case. The last thing this ratio did was make a higher high. And in the context of these counter trend moves here, 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 and here, if you owned XLK from point A to point B, you significantly outperformed IWM. And if you owned SPY between point A and point B, you significantly outperformed IWM. Our models and our allocations take all time frames into account, the primary trend and the counter trend moves, and when the primary trend flips. And that may or may not be happening currently. And when we're talking about leadership, we don't want to lose sight of the fact that the primary trend in XLK in isolation is unquestionably up. During Friday's session, XLK weekly was trading above the 20-week moving average in black. The same can be said for SPY. The primary trend is unquestionably up. Our goal is to capture gains within the context of primary trends. And it's very, very easy to overtrade your account in this type of environment and lose sight of the primary trend. And yes, the markets have been more volatile in recent weeks. But as we noted in May of this year, all of this volatility up here, here, and here was occurring within the context of an uptrend. So if we fast forward and we look at the charts of SPY, RSP, SCHG, XLK, IWM, and the NYSE composite, has anything significantly changed? The answer is no. During Friday's session, the S&P 500, or SPY, the S&P 500 ETF, was trading above an upward sloping 50-day moving average. RSP was trading above an upward sloping 20-day moving average. The same can be said for the broad NYSE composite. And you can see in isolation here, the chart of IWM on July 26th is indicative of a stronger trend relative to May 3rd, 2024. Also noteworthy from a shorter-term perspective, SPY daily, this is a DeMark chart, coming back into an area here that could potentially act as support. And the same can be said for XLK in this region here. We came back during yesterday's session to this gap here, and thus far we've held. And all of the charts that we're going to cover in the remainder of the video come within the context of a potential shift in Fed policy. It's highly probable that the Federal Reserve is going to lower interest rates at the September meeting. It's not likely that they're going to cut interest rates the next meeting at the end of July. However, their MO is that they will signal most likely that a rate cut is coming in September. And all of that, all things being equal, should be favorable for SPY, RSP, SCHG, XLK, IWM, and NYA. Now we're going to shift gears and look at shorter term time frames, which are also relevant. This is a daily chart of small caps IWM relative to XLK. This is 2022. Lower left-hand corner of your screen, moving averages range from the 20-day in blue all the way out to the 250-day in black. The chart on your screen is dated July 19th, 2024, approximately a week ago. And you can see the ratio of small caps relative to the S&P 500 tech sector was still below a downward sloping 250-day moving average in black. If we fast forward to this week, chart on your screen dated July 25th, 2024, you can see that ratio hesitated in this region here and then popped above the black 250-day moving average and closed above it. It is possible that this move is similar to this move here in 2023, this one in a bearish direction, meaning things can happen quickly. Also noteworthy, if we drew a trend line from here to here to here, at least for one session, we closed above that trend line. Longer above that trend line, longer above the black 250-day moving average, the more relevant it becomes. Starting to look more and more like the counter trend move in small caps relative to tech, or possibly even a trend flip, now has a greater probability of running for a while, something we have been and will continue to be open to. Lower left-hand corner of your screen here, this is the S&P 500, this is the COVID crash. The U.S. government starts to send out checks, unlimited QE, the money supply is growing by leaps and bounds, and eventually the market starts to become concerned about inflation in this region here in the second half of 2020. Top portion of your screen is a weekly cloud chart of small caps IWM relative to XLE. If you look at the bearish bullet points over here and look at the chart over here, this is the period where market participants are starting to become much more concerned about inflation. You can see right in here where blue drops below red, the ratio is below the cloud is flipped to red, the green span is below price, just as the S&P 500 is peaking. You can make an argument that what we have over here is possibly a move in the other direction. As of the close on July 25th, not convincing yet, but the lagging span, the green span, is above the ratio. Blue is above red, price is above red. The cloud has flipped from red to green and price is above the cloud. A lot of good things happening here. And since this was bad news for risk assets in general, this should be good news for risk assets. And we're still probably in a situation here where this relative move in small caps relative to the S&P 500 is most likely healthy rotation. And when we look back in several weeks or several months or several years, given what we know today, the odds are SPY, XLK, IWM, SCHG growth stocks, all of them most likely will benefit from the market's decreasing concern about inflation, interest rates, and Fed policy. This is not yet a convincing move, but it looks better than it has for the most part at any time. We have to go all the way back to 2020 in here to see a look as favorable as we have on July 25th, 2024 on the weekly chart. Still looking at a weekly chart. This time we're looking at small caps relative to XLK, the tech sector for the S&P 500 down here. This is a bullish period in here. The stock market bottoms in October of 2011 and for the most part rallies into 2015, the month of May here. And in the relatively early stages of that, you can see small caps on the weekly cloud chart start to check a lot of these bullish boxes up here in the upper right-hand corner of your screen. And as you can see down here, really good things happened in the S&P 500 for a long period of time, several years after this improving look. So if we zoom in on 2024 and drop that chart on the left side of your screen, still some work to do. But again, this is better than it's looked in quite some time. This green span popping above the ratio, we have not had that for some time. It looks like blue is trying to retake red. All of these are potentially positive developments and relatively early developments, again, that still have some work to do. Having said that, if we look at the same ratio over here, IWM relative to XLK, this chart is dated October 26, 2012. And as we noted, this type of development in here, which is similar to what we're seeing over here, this one's a little bit more developed with getting a weekly close with blue over red here. We don't have that yet on July 24th, 2024. But you can see the similarities to July 24th, 2024 and October 26th, 2012, both of the charts being small caps relative to the tech sector. So this is October 26th, 2012. If we look at asset class performance walking forward from that period, in the short run, the S&P 500, IWM, the Russell 2000 small cap, XLK, the tech sector ETF, RSP, the equal weight S&P 500, SMH, the semiconductor ETF, and SCHG, the large cap growth ETF, all of them were weak for a while, but it didn't last very long. This is October 25th, and you can see in mid-November they all started to rally. This is a performance chart. And the moral of the story here is XLK, going into January of 2014, performs very well. It gains 25%. That's not particularly bearish. But small caps, they did quite a bit better up here, over 45% in the same period. So if this look continues to evolve in a favorable manner and we start checking more of these boxes, it gets easier to continue to migrate or potentially reallocate some of your assets away from tech and into small cap. So let's go back and look at an emerging weekly trend on a cloud chart. This is June 9th, 2023, over a year ago, when SPY was flipping from a downtrend to an uptrend. Checking all of these bullish boxes over here. This is a good look. If the IWM SPY ratio shown on your screen here and or the IWM XLK ratio take these improving probabilistic looks and they start to morph into something more like this over time, it gets easier to continue that migration. We'll see how it unfolds. You can also see the improvement on the weekly chart of IWM in isolation over here. Weekly cloud, we are checking all of the bullish boxes. Now we're looking at an anchored volume weighted average price chart. It looks complex. It's relatively easy to understand. This is XLK relative to IWM. Right here, this is the beginning of 2024. It's noteworthy that this thin anchored volume weighted average price line here and this thin anchored volume weighted average price line here, one of them tied to this low in January of 2024, the other one tied to this high in the ratio in Q4 of 2023. You can see the ratio hesitated in this area over here and then pushed hard against tech and in favor of small caps. And that's a subtle difference relative to what happened earlier in the year here. It's not earth-shattering, but it also makes it a little easier to become more confident about continued outperformance in small caps relative to tech. Having said that, as of the close on Thursday, July 25th, 2024, the ratio has hit another relevant reference point. The blue line, anchored volume weighted average price line, the thicker line. And the reason why these are thin, they've been violated. The thicker ones are still in play. This blue line here is tied to this shift down here in Q1 of 2023 where tech started to kill small caps. And then in here, there's a little hesitation, and that's above this line and this line. This is a relevant region. This is a relevant region. You can see acted as possible support or acted as support. Both lines acted as support here. We held above both lines here. We'll learn something in the short run if the ratio bounces in this direction, or if we undercut this, then it gets easier to take an even bigger step towards small caps. We'll see how it unfolds. If these two lines are taken out, this orange line, pretty significant because it is tied to this low all the way back here in Q4 of 2022. Just as these lines up here could have acted as possible support, they did not. This is possible support, and this is possible support. They're simply reference points. This too is a daily anchored volume weighted average price chart. It is XLK relative to RSP, the equal weight S&P 500. This low here in May of 2024, the thin line, it's thin because it's been taken out. You can see the ratio hesitated in here, and at least in the short run, it's moving in favor of RSP and against XLK. And like the previous chart, as of the close on July 25th, it also hit a point that could act as possible support. This line here tied to this high in Q4 of 2023. This line here tied to the low in 2024. Similar to the other chart, if this gives way, then your confidence that RSP could continue to outperform XLK in the short run would increase, and then these lines down here would become reference points. Again, with this one being important down here, where the outperformance of XLK resumed early in 2023, that would be this blue line here. So we'll see if this chart can hold here, and if this chart can hold here. We'll learn something either way. A very similar situation here. This is XLK relative to the standard capitalization weighted S&P 500 SPY. So tech relative to SPY is still above the anchored volume weighted average price line down here, tied to that important point of reference where XLK started to outperform very early in January of 2023. This point here, you can see the ratio hesitated. This is a very important region in here. We're still above those lines. This line, and this line acted as support here, acted as support here, somewhat acted as support here. So right now, this still looks like an uptrend favoring XLK relative to SPY, but the fact that the ratio has been moving sideways in here tells us that right now it's a waning trend. It would be great if the stock market went up every day, but we all know that's not possible. We don't have anything in hand that says the primary secular trend is in doubt. Volatility pullbacks, corrections, they're 100% normal and to be expected. The next 5 to 7%, if the market goes up another 5 to 7% between now and year end, most likely are going to be much harder to capture than the previous 5 to 7%. Given what we know today, most likely patience and discipline are going to be the keys to capturing that next 5 to 7%. The best way to handle in an environment like this is to take it day by day and trade the chart in front of you. And we all know the only way that we can do that effectively is if we head into next week and every week with that flexible, unbiased, and open mind. The material in this video has no regard to the specific investment objectives, financial situation, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or an offer to buy or sell any securities or any related financial instruments, nor should any of its content be taken as investment advice. Any opinions expressed in this video are subject to change without notice, and Shivako Capital Management, LLC, or CCM, is not under any obligation to update or keep current the information contained herein. CCM and its respective officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. CCM accepts no liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.